Well, hey there, I'm Jeff. Welcome. If this is your first time here, well, grab a seat and stay a while. And if you've been here before, then take a seat and stay a while. So today I noticed in the comments section under one of the videos, someone wrote, how and when should an investor buy stock after hours? It's a great question, and that is what we're going to cover in today's video. So after hour trading, it's that block of time between like 4 p.m. Eastern time when the markets close and 8 p.m. And it can offer a lot of opportunities for investors, but there are also a lot of risks. So that's what I want to cover in this video. So this is going to be like a little guide on how and when and whether you even want to consider after hours trading. So let's just take a look at how to buy stock after hours. Now, not all brokers allow after hours trading. So you really need to, once you've opened a brokerage account, you need to check in with them or just Google it, find out. Here are a few that do. Fidelity does, Schwab does, E-Trade, Robinhood, and Interactive Brokers. I just checked those out so you guys would know. But if you have some other broker, just check with them. And then you usually have to enable in your account the feature in account settings. So you'll either do that on your phone or on your desktop version, but you usually have to go just turn that on so that you're not accidentally placing a trade after hours if you didn't mean to. And then you just have to know the window. Now, as I mentioned, the traditional after hours are between 4 p.m. and 8 p.m. Eastern time, but then there's also pre-market trading, and that's between 4 a.m. and 9:30 a.m. when markets open. For after hours trading, you almost always have to place a limit order, where some people might just place a market order to buy stock at whatever the given price is. You usually have to set a limit order if you're buying, and that is just the highest price you're willing to pay. So you'll say, I'll set a limit order for $15, and if the price comes down to 15 or below, it will trigger that order to buy your stock. Liquidity is really thin during these after hours trading sessions. So you can just think of this as, you remember when we were at school, you'd have lunch hour, and at a certain hour, everyone would just pour out of their classes and go down to the lunchroom. Well, that's like regular hours of trading, but after hours is like just slim pickings, not as many people trading. So you can have a lot more volatility and, prices can go up and down really quickly. So the next question after how do you make an after hours trade is when would you make an after hours trade? And that's usually in reaction to some sort of news. It could be an earnings release announced, say, at the end of the day, as soon as markets close. Or it could be a news event, something geopolitical happens, something in the economy, some macro news. And this gives you an idea, if this happened, this stock is going to really benefit, or I want to sell off, get out of this stock because either the news was great and you want to buy it before the regular session opens, or the news is horrible and you want to get out of the position. Stocks often move much more sharply after companies announce their earnings, and that's usually after 4 o'clock. So do you want to be in on that group of people that's reacting immediately after earnings? So this is a really hectic, chaotic, emotion-filled time. People are usually either buying furiously or dumping shares. And that gives you a lot of opportunity because if you know what you want to do, if you're tactical about it, you know what price you want to buy this stock at, you can get in, place your limit order. You may be able to buy stock much more cheaply than you would the next day during regular hours. But like I said, there's a lot of risk involved because there are not as many people trading and this volatility is all over the place. So it's really a high risk, potentially high reward situation. Macro events that could affect the rapid movement of stock prices after hour. The Federal Reserve could announce something at the end of the day like interest rate move, geopolitical news, or just some kind of an economic report that might really affect the whole market or just, the specific stocks you're looking at. Let's just say you have a job and you're busy during the trading day. You've got to be doing something else. The convenience is simply that you're able to trade after work or when you're done with whatever you're doing during regular hours, and so you can get some flexibility through after hours trading. So let's take a look at some of the risks of after hours trading. There are fewer buyers and sellers than during the regular trading day. So that means you're going to have a really wide spread in a lot of stocks, especially not commonly traded stocks. So you're going to have a big spread between the buy and the sell price, or the bid and the ask. And that can mean that you might have to wait a long time for your order to get placed, or when it eventually does get placed, it might be a partial fill. You might not get, if you're buying, all of the shares that you had hoped to buy. Another thing is the price could just move really suddenly. You could be hoping to buy your shares, at $17, and then suddenly they shoot up to 25, and you're like, wait, I wanted to buy at 17, and now it's just gone up. So like I said, it just jumps around a lot. Price volatility, prices can swing quickly due to low volume and emotional responses as well. So it's, like I said, kind of the Wild West. And partial or no execution. So you could place your order and just be waiting in after hours for it to fill. And you might wait, half an hour, 2 hours, it might not fill. And this might be the kind of situation that during regular market hours, since there are so many more people trading, your order is going to fill almost instantly or just within a few minutes. There are no circuit breakers after hours. So during the regular trading day, if there's a lot of volatility, say there's some horrible bad news and markets come crashing down, in the NASDAQ, for example, they have circuit breakers that will just stop trading at a certain point to let things cool down a little bit. They don't have that in after hours, so that's another thing. There are not those guardrails in place. So I just want to provide you guys with some best practices when it comes to after hours trading. If this is something that you're thinking of doing, always use a limit order. Trade only if you have a clear reason to do it. Don't just trade after hours because you think it might be fun or because you've never done it before, but have a tactical reason. For example, earnings have come out on a company and you've been learning about the company, you know what's going on, some kind of news or a major macro move, and you just want to take advantage of it. Check liquidity of a stock. Just see if shares are trading somewhat quickly. You can tell if the share price stays the same and it doesn't move up or down, in minutes have passed, that's a non-liquid stock. But if you see that the stock is changing in price frequently, then you could assume that it has more liquidity to it. But you really want to check that and avoid thinly traded stocks, those that really are not changing hands very quickly. Avoid chasing headlines. You don't want to just look at stuff on the web and then think, oh, look at this headline, I should buy this, I should get in now. That's an emotional response, and one of the problems with that is that initial reactions are often reversed the next day. So just because you're reading a headline, you don't have an advantage. There are hundreds of thousands, if not millions, of other people who have read that exact same headline. You have to be comfortable holding overnight because you might place an order and it winds up filling. Now you own it, and you might have to just own that overnight until the market opens the next day. So if you're a long-term investor, this probably won't matter. If you're trading after hours, you might wind up buying some stock somewhere between 4 p.m. and 8 p.m., and you're going to have to hold on to that until the market opens. So some people don't like that kind of unknowingness or just having to wait if they want to exit a position. And finally, it's something that you should use tactically but not routinely. This is a very high risk, highly volatile area. It's something for experienced investors who are prepared for the risks and the volatility. And for most investors, just waiting until the regular session starts, at 9:30 a.m. Eastern time, goes until 4 p.m. That's probably the best for most people, but it's at least worth knowing why if you check with your brokerage and you're looking at a stock, you'll see a lot of activity before the market opens. That's the pre-market hours or after hours. And you kind of wonder, who are these people? Well, a lot of them, like I mentioned, are institutional investors. But now that you have more and more individual investors on Robinhood, on Schwab, on Fidelity, and just a lot more individuals, you have people who aren't huge hedge funds placing orders and buying and selling in the after hours. So I'd say, when might I pay it? I'll just give you an example. Let's say I have been following Rivian and I've noticed that the stock has been around $13 or $14, for the last several months. And I really want to buy some, but I'm afraid, this stock may go nowhere for the next year. And then I've come across a news item or something, and it says something about things going better than expected for Rivian. By the way, this is just a hypothetical, okay? This is not real. This is not advice. This is not anything happening in the real world. But let's just say earnings were released, or it was discovered and released that there's a big backlog for Rivian SUVs and pickup trucks, and they are fighting to try to meet this strong demand. But maybe this is new information. Well, you might go, oh, well, maybe I should buy now while it's still at 13 or 14 bucks, because once everybody knows about this tomorrow, this stock could shoot up to 18 or 19 or 20. So this would be a situation where a skilled investor who understands the volatility might say, you know what? I'm going to go and I'm going to place an order in after hours. I'm going to try to buy this, at $14.50 or below. So place a limit order for $14.50 and say, I'm willing to buy 100 shares. And your bet then is that you're getting better pricing in after hours than you will the next day. So that would be my best simple explanation for why after hours might be useful in a certain situation. It's a tactical tool, but it's not something that you just enter into after hours every day trying to see what you can do. After hours trading could be really useful in that kind of situation if you know what you want to do and you understand that due to this new news release or this new data that hits your dashboard, that this might be a good time for you to buy a stock, and you just want to do it now and get it done before the stock market and all the hordes of other investors log on to their brokerage at 9:30 in the morning and start trading it. So those are my thoughts on everything having to do with after hours trading. Let me know if there's anything else about after hours that maybe I didn't cover, and I would be happy to address that in a future video. So thank you so much for stopping by. If you have not yet subscribed to the channel, but you like stock investing, especially interested in small cap or growth stocks, or if you're interested in ETFs, that's something that I kind of specialize in and love to make videos on, then by all means, subscribe to the channel because I talk about that stuff all the time. And tap that like button if you haven't already. Thank you so much for watching, and thank you for being here. I'll see you in the next one.